don't believe in crypto
Yeah,
anymore.
most people don't believe in that.
Do we not believe in crypto anymore now?
No, it's not that we don't. It's just that I think this is the case. Even with me, even when I'm trading my cryptocurrency, I'm not necessarily thinking all the time about the technology and thinking about, oh, I need to hold this because in 10 years, and that's bad trading of me. But still, my initial instinct is, hey, I need to capitalize on this now because it's going to pay for what I need now.
Hi, I'm Tyler.
And I'm Santana. Welcome to DeFi Days. On this channel, we cover all things DeFi. If you're interested in Bitcoin or discovering what an NFT is, then you're in the right space.
Don't forget to check out our Discord if you want to reach out to us or talk to other people in the DeFi space. Link will be down in the description.
Yeah, we're also hosting a crypto giveaway. One of our first 50 subscribers will be awarded $50 in a crypto of their choice. And all you got to do is like and subscribe to enter. Yeah. On today's episode, we'll be talking about the crypto crash. We have seen a massive dip in prices for all over the board, from Mana to ADA to Solana to Ethereum and Bitcoin. I think so much lower than it was just a month ago. Bitcoin hit an all-time high of about $69,000, and Ethereum was up at 49. Almost 5,000. Those are all-time highs across the board. And again, this is kind of what really scares early, new investors, to see the volatility of something priced like this. But for people that have been in it for just a little bit, or just at least have done a lot of research on the charts and see the price histories, it's sale time. You know what I mean? This is a great time.
Expect the unexpected. And buy the dip.
Exactly. Buy the dip.
If you believe in the technology long term, buy the dip. Yeah, this is a great opportunity to buy in. Dollar cost average in like we're doing.
Exactly.
Just dollar cost averaging in. I bought a little bit more.
Slowly but surely, just building up your portfolio and setting up, because I will tell you right now that just like it has in the past, it comes in cycles, it comes in waves, and we'll see another surge, and I'm sure that we'll see more all-time highs across the board. So, invest at your own discretion. Yeah. Today, we're going to be talking mainly about what we think might cause crashes like this, and what
do you think what's causing this dip right now?
Well, I think there's probably a number of different. There's never just one specific reason why things are crashing. I think it's a culmination of different factors. Yeah. And one of those factors could be that this is the end of the year. People are taking profits on their investments, and I think that
you have Christmas coming up.
Exactly. There's bills to pay. There's things to do with the money. And as an investor, would you say that part of the investment strategy is having an out and figuring and kind of and when you start to see
another all-time high. People could have been profit taking.
And I think that's a lot of what happened. You got people seeing oh my God, this is an all-time high. I think I'm not gonna be greedy. I'm gonna go ahead and do what my initial plan was to do. And
could have been a couple profit takers really set the trend of it going down again. It reaches an all-time high. A couple whales take profit, and then everyone starts to panic. Oh no, it's tanking again. And this correction going on for so long, I don't want to say killed the momentum, but definitely put a damper on it. And
and one of the things that I've learned as I've grown in this space and just kind of with this information is that no one knows what's going to happen.
No,
he doesn't know. I don't know.
It's all predictions.
Even the one of the biggest Bitcoin holders, or someone that's studied for years and years since its conception, nobody knows what the market's going to do. So there's no way to really determine whether or not these price predictions are more or less just wishful thinking. And one of those, with that being said, when people were saying at the beginning of this year, we're going to see it hit 10K, we're going to see it hit 100K. There was a lot of that.
Things that they were basing it off of.
Exactly, and a lot of that was based off of previous price point and price targets and whatnot.
But this year is different. Every year is different.
The chart or what happens now is defying history. You know what I mean? True. It's defying what is said to happen with momentum in
what happened in the past in 2017 isn't going to guarantee what happens now. So a lot of people were taking the charts, like you said, from the past and saying, oh, well, this is what happened in the past, so this is what's going to happen here. It could happen, but that's not saying it will, and obviously it didn't. We didn't have the same price explosion in December like we did back in 2017. So I think things like that also really make people discouraged. When they were kind of expecting this big blow up or kind of a get rich quick maybe, because they've been watching some YouTubers say, oh, it's going to go to 100K by the end of the year, and then when it doesn't,
speculation.
Yeah,
See,
when it doesn't,
think
they
that,
say, oh no, it's not going to 100K, and then they sell.
Yeah, and so
There's a lot
when
of
you have
people doing that.
speculation, you have expectation, and when there's people speculating out there and something doesn't meet your expectations, you're going to see a lot of people pull out, and when that happens, it starts to like a domino effect. It's a chain reaction of people that are just kind of like following that trend, and I think that that's how the cycle moves back and forth. Is you've got something like an initial, you know what I mean? Something happens, then there's the reaction. You know what I mean? There's the action, there's the reaction, then there's everything else that comes afterwards. And
it could have started from a couple whales taking profit, you know?
So
I think that's what it did.
Saying that, there was a report that a few wallets that were like massive holders of Bitcoin started to become active after laying dormant for so long, and I think that's something.
Were they selling or?
Yeah, they started to sell some coin, and I think that really kind of like sets off alarms for a lot of investors. Like, oh my god, we've got these big we've got these big whales starting to move, and they're starting to like really you know, move their money around. Like it's time to do it, you know, and it's time to pull out.
That definitely causes a little uncertainty in the market.
Yeah, for sure. And so it's something to look out for, and just be very aware of when you are investing, to have your investment strategy put together. You have an in, you have an out, you have like something that is what you can consider something a manageable risk versus an unmanageable risk, and just having yourself put together a plan, because that sets you up for these dips and sets you up for these super high increases. Like there's one thing that I think gets to a lot of traders is the greed. When you see that green candle just continuously rise and continuously rise, and you're just like, this can't fall, this can't drop, and then all of a sudden, you know what I mean, you wake up the next day and it's down 60%,
it's
you know,
really
50%.
It's really hard to catch the top, as well as, you know, it's really hard to buy the bottom. It's really hard to sell the top. So that's why you have to come up with an amount, like you said, predetermined. When Ethereum hits 5,000, I'm going to sell half of my portfolio. Or, you know, if you're looking to trade it, but if you're going to hold, you know, it's a different story. But you know, when it hits 6,000, I'm going to sell the other half, or I'm going to sell a third at each of these increments. That way, you're not tied to those emotions as you see it going up and want to hold on to it.
Exactly. Nobody can time the market, and so it's important to set those benchmarks for yourself and just understand what your purpose is in it, and what you plan on doing with it. What you said about how you're buying in, how about you talk about that a little bit, because I think it's a really safe. How about you explain that a little bit, because it's a really safe and kind of like, and I wouldn't even say it necessarily really safe. It's just it's a smarter method of buying in than just going ahead and throwing in $400.
So I think dollar cost averaging, like you said, is really good for buying as well as selling. So basically, it's a way to protect yourself financially and emotionally from feeling like you missed out. You can. Dollar cost averaging basically means that you buy. So say you have $1,000 to spend, and I want to invest $1,000 in Ethereum. Rather than spending all of my $1,000 right now, I'll buy $100 a week for the next 10 weeks. Whether that be at every Friday, or whether that be whenever there's a dip within the next, you know, a couple weeks, I'm going to put in a couple dollars at a time. And the same thing with pulling out. So rather than saying, okay, Ethereum hit 10,000, I'm going to sell my whole portfolio, and then it goes to 12,000 tomorrow, and you feel like you missed out on that gain. If you sold it half of your, or let's make it even easier. Say you sold a quarter of your portfolio at $10,000, and then a quarter of your portfolio at $12,000, and a quarter of your portfolio at $15,000, and then you decide to hold the other quarter forever, you would have essentially layered yourself out. That's dollar cost averaging.
And they have systems in place to help you do that. Whether you're using Coinbase or whether you're using Robinhood, they have limit orders, and then they also have what's called reoccurring buys. And I think that's what I've kind of geared towards myself. And it allows you to set a certain amount of money that you want to spend each week, each month,
each
2
paycheck,
times a week,
whatever,
you know, each paycheck, and really kind of just continuously buy something. And whether you're, you know, holding for the end, which is an awesome method, or whether you're just aiming to hit a certain, you know, point before you pull out, it's just a good, safe strategy.
Everybody should put in $50 in Bitcoin or Ethereum a week, at least, you know.
That's bold.
I think so, you know. I mean, if you can't afford that, maybe put in $20 a week, or $50 a pay period, you know. Do whatever you can. It won't seem like a lot each time, which is why it's really good, because you're only putting $20 here, $50 there, $100 there. But when you look back at your investment in a year to 5 years, you know, your portfolio is going to be huge. And with cryptocurrency gaining mass adoption and the prices are going to be going up in a few years, you know, if you're not looking to sell it in the short term, prices are most likely going to be going up. You know, you look at where prices were 4 or 5 years ago and where they're at now, it's just ridiculous games.
Absolutely.
So that's what I'm doing. Just like I'm doing recurring buys as well as dollar cost averaging in. I have almost all my investments in crypto right now.
Nice.
Yeah.
That's amazing, and I think that kind of like sums up a lot of what we think about the market dip for now. You know what I mean? I think that's kind of what we've agreed upon on what could be causing it and kind of what goes into navigating it.
All right, well, that about wraps things up for today.
Yeah, thank you guys for tuning in. Don't forget, we have a Discord, so go ahead and jump in there, get active with the community. We talk about all things DeFi in there. We talk about metaverse stuff, new technologies coming out. We'll put a link in the description.
Awesome. Yeah. Don't forget, we're also doing a cryptocurrency giveaway. $50 of cryptocurrency of your choice. All you have to do is like and subscribe.
Definitely. Hit that notification bell if you guys got time, and thank you for tuning in.